Hello, everyone. Thank you so much for joining us. I'm Nick Elliott, Head of Communities with Dow Jones Risk and Research, and I'm very pleased to welcome you to this latest webinar in our risk series. This is where we look at risks in one of 6 major business sectors, and we do that alongside a series of research reports that we've been publishing. The latest one of those, and the topic of this particular webinar, is on payments, a very important and fast-growing sector of business. You'll find the research report in the handouts tab, which is on the right-hand side of your screen. So you can download it from there. You'll also in there find a very relevant paper from the law firm that's represented in the webinar today, DLA Piper. Also, it's a good opportunity for you to ask questions of the expert lawyer that we're presenting to you today. So please put your questions in the Q&A tab that you will see also on the right-hand side of your platform. So let's get started with the discussion. And I'm very pleased to welcome Sophie Lessar, who is a partner with the law firm DLA Piper, who specializes in the payments business. Sophie, welcome.
Thank you, Nick.
I wanted to start by asking you a broad question, which is that this is a fast-moving industry. There's a lot going on in payments. Can you just run through some of the major changes in the business that are creating risks for businesses?
Thank you, Nick. As you say, it's a really fast-growing space, payments. On the domestic stage and also internationally. And one of the things that we have seen in the last few years, particularly magnified since 2020, is the digitization of payments globally, both from a consumer and also in a B2B context. And that has generated some of the changes and developments, both in terms of opportunity, but also risk in the market. The other thing that we're seeing is the kind of huge scaling and internationalization of the business. There has always been international payments activity, but the scale of that growth, again, in the last few years, has been really, really significant.
Great. When we look through companies' corporate filings, payments companies' corporate filings, the top risk that we found mentioned over a recent period was cybersecurity. And is there a natural connection there between the digitization of the business and cybersecurity risks, cybercrime?
Absolutely. So from what we see in our conversations and work with business, cyber risk is a significant focus for business because of the digital nature of the business and also, frankly, the industrialization of cyber fraud. It's not just payment terms that are becoming more sophisticated. The fraudsters are as well. So that has multiplied the risk that we're seeing. The other reason that we're seeing a lot of focus and attention from business around cyber as an area of activity and a risk and how to manage it in terms of compliance is because in reflection of increased risk, there's also increased regulation. So in the UK and Europe, we've had for a long time kind of rules and requirements about outsourcing and your infrastructure and how you manage and control that. But as of this year in the EU, there's been the Digital Operational Resilience Act, which really heightens the scrutiny on people's supply chain, how they manage that, the controls, the audit, and the governance. And as a UK lawyer as well, one of the things we also see is that impacts UK business where it touches Europe as well. And there are similar focuses happening internationally. So you've got the balance, you've got the risk, but also the regulatory onus, which is meaning that people have a framework that they have to comply with as well.
So to summarize, I think what you're saying is that we have this increased digitization. So that's a bigger attack surface for hackers and probably more sensitive information that's available to cyber criminals. We have the growth of the cybercrime industry. And then alongside that, we have this growing body of regulation that companies also have to pay attention to. So they've got those different risks.
Exactly. And the need is kind of that we see as the need to navigate the risk and the regulatory compliance kind of in tandem, because you need to mitigate the risk and also demonstrate that you comply. And there is the burden of both of those, but also the kind of the good player opportunity of demonstrating good infrastructure, good systems, and creating customer confidence as well. So that is kind of, I think, the intention from the regulators, at least, behind the push as well.
Okay, great. And you mentioned fraud, and there is this growing and I think pretty dominant form of fraud called authorized push payments fraud. Can you explain what that is about and what's driving it?
Absolutely. So again, the trends in the growth in authorized push payment fraud, or app fraud, as people may have heard it being called, kind of reflects, mirrors quite closely the explosion in digital payment, again, particularly since 2020, with the huge shift to digital, that has never really, kind of the tide has never really gone back. Authorized push payment fraud is where a user is led to authorize a payment under misapprehension that they're operating genuinely dealing with their own bank or payment service provider, for example. So that creates challenges for a firm in terms of the risk has always been focused and compliance focused on identifying bad actors and third parties. You know, we can see a hack in the old world, someone kind of marched me with a knife to the cash machine. That is a different world where you can see it looks like, from a firm perspective, that I put my PIN into the machine, I gave my authorization credentials, and that creates a a challenge for business, and has created a huge challenge in terms of identifying and managing that risk, compared to the old world that the regulation we're operating under is kind of designed to deal with.
Are there any best practices that have emerged in for companies in preventing this form of fraud?
So we've seen a huge amount of activity. Obviously, businesses have been navigating their way through this in terms of developing technology solutions to monitor fraud and address it. The key kind of development that we've seen, again, from a UK perspective, we see it in the UK, we see it worldwide as well, is again, the regulatory activity forcing firms to take action, with the intention that this is supposed to create customer confidence, in some cases deliberately pushing firms to invest in their infrastructure around managing this risk as well, which has been, from a PR perspective, really important to those governing. So what we've seen, for example, in the UK, is a regulatory framework mandating reimbursement, with the need, therefore, for firms to create a framework around how they identify and manage risk. Some of those rules have existed historically, for example, under PSD or PSRs, but it's created a very app fraud specific framework. And similarly, we see developments coming out of the EU intended to address that risk, and also kind of from other geographies are looking at the different kind of ways of monitoring risk and handling reimbursement and consumer exposure.
So it sounds as though the regulators are looking both at the controls that companies have, but then also providing an incentive for them to improve those controls through the reimbursement law.
I was going to say incentive is certainly the word that I think the regulators would use.
Okay.
It's from what we're seeing, there has needed to be a lot of work to do this, because the framework has not existed, and firms have also asked for the certainty to create the framework, so there's a level playing field as well, so that everyone feels or is aware that they're operating domestically within the same legal framework as well.
Okay, great. I wanted to pick up on one other point that we touched on at the beginning of our conversation, which is that this is a really innovative sector. And in the UK, the Financial Conduct Authority has issued several warnings that payments companies are increasingly acting like banks, but they often lack the same level of compliance and controls. Can you explain here what the FCA is talking about? Where do you think the weaknesses are for these upstart companies?
Absolutely. So, as I'm sure you're aware, and those watching today are aware, there's a huge range of business types in the payment space, from kind of new startup to very established and long-term market participants. And some of the areas where the regulator is scrutinizing are around kind of different pockets of activity or different types of players in the market. So the UK, for example, has seen a lot of innovation. There has been a great policy intention to grow and encourage the development of payments and e-money business in the space. Some of the content that we're now seeing come out of the regulator stems from the fact that young upstart businesses have grown and scaled exponentially, and there are a number of players now in the market who have taken that path. So a lot of the discussion and scrutiny that we now see at the moment kind of focuses on two key lines, I think, if you boil it down to the essence of what that is. And I think the first is around overall governance, because we have firms that have started off as maybe tech-centric fintech companies, move fast and break things. And actually, as they scale, the volume of their business grows, their international sites grow, there is a question from the regulator about, does their governance match the regulatory expectations, particularly for a business of that scale handling customer money? So that's been the one limb to the regulator scrutiny. Kind of not unconnected, the other area of focus from the regulator, and that goes back to your point about kind of whether payments firms act as quasi banks, has been about client money safeguarding. So one of the key differences for a payments firm is, from a UK and EU perspective, is it's not a bank. It cannot hold deposits. So the question is, what about insolvency risk and protection of user funds, be it a consumer or be it an institution? So again, the focus from the UK FCA in this scenario has been around those protections and ring fencing, both in terms of compliance with firms with the framework as it exists already, and also looking forward, particularly in a post-Brexit environment, to enhancing the UK's rules around customer fund protection. Because from a UK perspective, the UK regulatory framework no longer has to replicate the EU's Payment Service Directive. So what that means is the UK is looking to kind of develop its own best practice, create confidence in the UK market. And one of the things it's looking to do there is to enhance the customer money protection regime that it already has.
Great, thanks for explaining that. Now I wanted to look at the other side of this argument and refer back to the survey that DLA Piper did last year that found that a significant majority of respondents, 73% I think it was, said that regulation is holding back innovation in the payments sector. What are your thoughts about where regulations might be considered too burdensome for payments companies?
So I think, and I don't think it would come as a huge surprise to everyone, kind of given what I've just said, that I think in terms of the burden on payments from a regulatory perspective, what we see people finding a challenge is the breadth and wealth of regulation that there is that touches a payments business, and particularly given the international cross-border nature of payments business, the interaction of that regulation. So the key question would be, there may be challenges in interpretation or application of particular types of regulation. So, for example, about secure customer authentication has for a long time been very challenging for firms to apply kind of in line with the expectation of the rules or vaguely drafted rules. But actually, it's the wealth of regulation that you see that touches your whole supply chain. Sometimes some of this is now quite old, and the evolution of product doesn't necessarily fit old law that didn't anticipate the way that business would work. And also we've got new risks emerging? How do we manage those with, say, fraud, cyber? And also the fact that if you're operating across borders and you're looking to do the same thing around the world for customers around the world, or for global business clients, can you establish an international framework, international compliance policies, and navigating that, mapping your way across kind of the interpretation challenges and also the cross-border differences in approach of the law or of regulators, is an area where often we see people coming and asking us questions about how they navigate, how they identify the frameworks that are out there.
Okay, great. For the audience, just a note that we're about halfway through our time, and a reminder that if you have a question for Sophie, you can write it in the Q&A tab that you'll see on the right-hand side of your screen. So, Sophie, continuing that theme of international regulation, the EU instant payments regulation took effect last year, I think, this year, and it comes with significant compliance requirements. What are the main considerations for payments companies in relation to that regulation?
Thanks, Nick. So the instant payments regulation comes kind of amidst a panoply of broader EU initiatives, which are particularly driven at building confidence in the market and a smoother, more streamlined EU infrastructure. So a lot of the regulation is quite technical. It sits in the same landscape as the new Payment Services Directive and Payment Services Regulation, which will come into play later on, and also in the context of things like fraud, anti-money laundering type rules as well. So the key things that the firms need to think about under this regulation is moving money with certainty fast, and particularly with the new rules around payments transfers coming into play in October this year. That is what we're seeing as presenting the technical challenge to business, particularly where you've got legacy systems and the need to update and upgrade, make sure that you comply across your business and work out how those interact. Also, as we were talking about interactions with third-party suppliers, where you have dependencies there and how to affect that. And on top of that, you've also got where you're affecting fast payments, there's also the scrutiny around screening of payments for fraud, for sanctions, anti-money laundering compliance, and how do you ensure that you comply with all of those things at the same time, because you need to move fast, and are you always going to be able to recover money if there's an issue, and you've got to balance the need to show the regulator compliance with instant payments, but also with all those screening requirements as well. And what you need to do there, and we're seeing, is the need to look holistically across all the different touch points, both from a business change perspective, a compliance perspective, and a supply chain perspective as well.
And am I right in thinking that the UK has been ahead of the EU when it comes to instant payments? And if so, are there any learnings from the UK's experience with this?
Definitely. So the UK has had a faster payments regime for quite some time now. And I think there are learnings from both the kind of the positive and also the challenges around this, in terms of the need for certainty, and particularly around some of the issues that have emerged. So, for example, around the need for accuracy of payments and what happens if payments are misdirected, either deliberately or accidentally, and the importance of having a recourse framework around that in the context of business interaction, interoperability, and also from a risk management and compliance perspective as well. What we've also seen around this is the kind of the value in getting it right. There have been difficult lessons along the way, but generally the customer trust and the strength in firms that this is creating from a brand perspective, I think is seen as a positive. So one of the lessons that comes out of it is the kind of importance of weighing up the burden versus the benefit of some of these regulations from a firm perspective, where they do create trust, and also as well from a kind of a learning perspective, because we have international businesses in the UK that do business in Europe as well. for those firms, there is the benefit of having deployed this technology, these kind of business models. And whilst the framework will differ, kind of from a SEPA perspective or from a faster payments perspective, the institutional infrastructure around implementing these kind of requirements, I think is a benefit to firms that have done it before as well, because you can take the learning kind of from where things have worked well or not so well, where risk has emerged in the past. This is an area where risk doesn't stand still. And one of the key learnings, I think, has been the need to constantly evolve your compliance and be reflective of and aware of developments and trends and risks as they emerge in the market, and looking to be on the front foot as much as you can with those as well.
Very interesting. So I wanted to refer back to our risk report, and one of the things that we found in some of the filings was a mention of the complications of data localization laws around the world. Can you explain what the trend is here and how it can complicate business for a payments company?
Absolutely. So from a data perspective, as I'm sure people are aware, obviously there are global legal frameworks around data protection compliance. And sometimes this can be domestic or it can be regional, as in the EU's GDPR, which is often held up as a gold standard globally. What happens though is that where you have different legal frameworks, the possibility of exporting data between the different jurisdictions becomes challenging if the regulators take the view that the other jurisdiction doesn't operate to as high a standard as we do. And that's definitely something that is kind of seen around the world already. So what you have is a domestic trend towards ensuring that domestic data is protected, and then you've got the interaction with global cross-border data flows. Sitting on top of that, as we've talked about already, is the growth and globalization of the payments business. So we're talking about a genuinely global business for global companies that operate across borders. And with that, we also have payments that are happening across borders as well. So and customers who are mobile, and businesses that operate in many jurisdictions. So you have a question about how do we manage operating in all these places, and where can we hold our data for our whole global business in one place? What do we tell our customers? How do we manage that? Particularly because we're talking about different types of data, transactional data, fraud risk compliance data, just kind of to skim the surface. And management of that again needs very careful mapping and sophistication of organizations. And with growth comes complexity, and some of the challenges we see are the organizational need, particularly say for a business that is operational in very different legal and regulatory environments. So how you navigate and manage that, and how genuinely interoperable and cross-border your frameworks can be, or to what extent you have to be quite localized in order to comply with the different legal frameworks. And then you've often got a question of, the compare and contrast. Can I do the same thing everywhere? What's the difference? What, in effect, do I actually have to do, both internally and from a customer facing perspective with my suppliers? What's the dependencies I have there? What do I have to put in place with them as well?
Yeah, it sounds like a complex area. We have a question, an audience question here from Nitin, who would like to ask you this, Sophie. Besides cybersecurity risk, can you touch on treasury and cash management risks that an enterprise may need to make because of the speed of payments? Is there anything there that you can unpack for Nitin and the audience?
So again, I think speed is the key here, and clarity, and the importance of having that audit trail, because you can see firms both in the regulated space and also as consumers of these services moving vast amounts of money at speed around the world. And the challenge that we see particularly are around record keeping, audit trails,
Mm,
manageability, and where identifying, are there, from a firm perspective, are there regulated activities happening or not? You find, particularly from a treasury perspective, that a business hasn't always in its growth phase thought about whether or not it is affecting payment services, or it's the importance of its dependence on third party providers, or kind of whether it's providing services to third parties as well. So again, that mapping becomes very, very important. The understanding of what a business is doing, and who who has the risk, who has the control and compliance obligations, and how those are managed appropriately.
so another risk that we found prominent among payments companies in their securities disclosures was artificial intelligence, but the way they frame that risk varied. Sometimes it was in relation to possible misuse of data or opening up more potential for cyber attacks, changing laws and regulations. How do you think companies can approach managing risks related to AI and payments?
So again, as technology centric businesses, payments businesses, AI is one of, as for kind of many financial services and technology businesses, is absolutely the discussion of the moment,
Yeah.
both in terms of AI as a risk and AI for good. And as part of that, AI as a tool or a method for handling risk as well. And what we're seeing from a technology perspective is a very rapidly changing landscape, in terms of the technology and what it can do and how it can be deployed. And what you see are the questions about kind of the different types of firms and what they do, and whether they want to be a first mover or a fast follower, and how to navigate risk and compliance frameworks when you're dealing with a degree of the unknown. So, particularly where you're operating again, as a payments business in a regulated landscape, some of the questions that we're seeing at the moment is, well, how does this affect my compliance obligations? Is it same old, same compliance framework, new technology, or do I have to do something different? Do the oversight requirements change? And from a regulated perspective, that's still an evolving discussion and expectation. So in the UK, for example, there's been consultation around the question of, should we have sectoral AI legislation, or should we have a national AI legislation with sectoral guidance? So we worked with the financial services industry in navigating that consultation response, again from the perspective of a highly regulated landscape where the way you do business, your compliance infrastructure, is subject to a lot of scrutiny already. So the questions will be kind of, what do we do that already applies? How does it apply differently? And also kind of questions about, where are the opportunities? Again, some of the really interesting conversations we're having at the moment is the deployment of AI for things like fraud monitoring and scrutiny, and how you ensure you comply using perhaps a slightly different way, or of working around it, to the more human in the loop technologies or solutions that may have been used historically.
Very interesting. And there's a link here with my next question, which is something that was in the DLA Piper survey from last year, where you talked about how your clients are increasingly looking to you and your fellow attorneys for horizon scanning. Can you explain what that entails?
Absolutely. So I think, as we've touched on today, there is a huge amount of business change, and there's a huge amount of law and regulation out there, which moves and is moving fast at the moment. You have regulators kind of actually saying we're going to be more commercial at the moment. So what is important for people is to see across borders, across different countries, what those frameworks are and how they fit together, so that a global business can work out, where do we have frameworks that we can apply globally, or how do we differ, and what's coming down the line, so we can prepare for new regulation, so that we can map for it, we can budget for it, and we can be prepared for changes that are coming from different angles.
Great. Well, we're just about out of time. So a reminder to the audience, you can download the handouts you'll see under the handouts tab. That's our report on payments risk and the DLA Piper survey from last year. Sophie, thanks so much for joining us. That was such a rich set of insights that you had to offer, all sorts of strands there that I think we could follow up on and turn into other interesting discussions in their own right. But we'll have you back at some point and pick up the latest trends in the payments industry, which surely will keep developing fast. So thanks for joining us, and thanks to all of you for joining us. We hope to see you at one of these risk webinars in future.